Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief the week ahead. Today, we're going to talk a little bit about holiday trading and what it is to trade when the markets are closed. Yes, it is possible, but it's not necessarily the best idea. We're also going to talk a little Bitcoin and why there's some major concerns in the crypto sphere, and it all has to do with Epstein fallout. I know that I said I was going to do some work and sort of put out what exactly is going on in the Epstein and how it's going to impact the financial markets. I did that a little bit. I got into it. There was just a lot more, a lot of scuttlebutt, a lot of rumors, a lot of really crazy stuff going on really at the tippy top of the investigation. And what we really have to watch out for as traders and as market participants is that we don't get caught up in a mania. And what a mania is when everybody starts acting irrational. And typically what that means is selling in a big, big way. And I'm curious of what's going on with Bitcoin. Is something's really wrong here? It doesn't feel right across the crypto sphere. I've heard a lot of reports about what may be coming out of the Epstein files. I've heard a lot of things, a lot of rumors. And what we're going to do here is I'm not going to put any rumors out there and try to be sensational and get views and talk about, the biggest conspiracy in the world, maybe world history. What I'm going to do is I'm going to tell you exactly what you need to look for in the markets, because that's what these streams are all about. That's what the website How to Trade's all about. It's what the brokerage switch markets, that's what it's all about. It's making money. It's protecting your money and making sure that you don't make bad mistakes and sort of get sucker punched. Now, over the past several months, I've had an opportunity to talk to a lot of you. I've talked to a lot of you on a personal basis, and there are some real good success stories in there. There's also some real heartbreaking stories that I've heard. And I'm always one of those people that wants everybody to succeed. That's not window service. That's not an ad, me giving you an ad pitch. I'm not going to sit here and be some of these guys on the private jets that go, well, if you lost money, it's your fault, and I'll gladly take it. I'm not that guy. I'm somebody who has been around these markets for a long time. And I remember from my own experience, specifically back when I first started in the heart of Arab Spring in 2011, we could not figure out why the oil markets were reacting the way that they were to news events that were already priced in. We were being surprised on a daily basis, and some days we made money, and other days we got slaughtered and crushed. And this has the feeling of that same kind of market dynamic where you can have something like big tech crash, 2% last Thursday and then rebound and still be down to over 3% for the month. The volatility day to day, it feels like we're looking over the board, over the tote board, and going, what's going to go crazy today? Now, we can't predict it. We don't know it. I'm not an insider. I'm not a DC insider, but I've been around these markets for an awfully long time. And I can tell you that this feels to me like there is a major surprise in here. And I have a feeling that it rotates around these Epstein files, prosecutions, and people that are going to be leaving their positions at very high levels. Now, I've got some evidence of that today, and we're going to pull some charts and look at our trading systems, our 9 EMA strategy. We got to look at that, show you why it's not a good idea to be trading that on short time frames today. And then we've also got to dive into some movers and shakers for later this week. There will be a trade idea out later today, along with our hot picks video. That's going to drop ahead of the UK session Tuesday, and then you're also going to get our newsletter as well. So I want to welcome everybody. I'm way behind on the live chat. It's going off over there. Good to see you. I'm in the How to Trade trading room. We got some familiar faces. Andrea Garwell, good to see you. Andrea Tuku, Bobby Bob, Lita, Ralph H. Good to see everybody over there. I'm in the How to Trade community. We've also got a lot over there on YouTube. Bob G's. Hello, Shane. We missed the USA volume today. Well, the reason why you missed it was the President's Day holiday. And the President's Day holiday today means that there's going to be nobody from the United States really can trade stocks. Our stock markets are closed. But we did have an early halt. We're still working on that early halt. But the futures contracts, the commodities, they're all over the map right now. I don't recommend trading anything today. Holiday sessions, problematic. Monday sessions to begin with aren't very fun. They can get you into trouble anyways. And you throw on a holiday, an extended weekend here in the United States, I don't want any part of it. So I didn't make a trade today. Didn't even open up my order entry platform. Not interested. Business is going to pick up tomorrow, and we are going to be there and ready to go. Now, as far as what can you do to understand how not to lose money on a holiday? Number one thing I say is don't trade. It's that simple. If liquidity is not there in the markets, you can't trade it. The reason why is those bid-ask spreads are crazy. You also see really crazy price action, sweeps, what I call sweeps. You get a block order, hit the market, and it moves price dramatically. That happens a lot. So market closures can be tough to trade. As a matter of fact, I recommend not being involved at all. I think you're going to find over time, even if you made money today, over the next 10 holiday sessions, you're probably going to be at break even. You're going to have some really good wins, and you're going to have some really big losses. That's just the way chaotic, choppy markets work. So for me personally, I'm not even remotely interested in engaging today. Now, Why? Limited liquidity, less than normal volumes. That means that your spreads are going to be big and your slippage is going to be big. Slippage, it can be tough to get your price. It's tough enough in the markets as it is to get perfect fills. But when you get into a market that is compromised and it does not have the volume that it needs to have for us to be successful, meaning if I want to buy Bitcoin right now, it's $67,980 and I don't have any takers, I'm probably not going to get my price. And that's a real problem. That's problematic. Like right there, it just jumped $7 on a tick. That's not good. That's not a good thing. You want to be in there when the markets are deep and liquid. Wide spreads. Spreads could be erratic. I mean, let's just take a look real quick right over here. Great Britain pound, Japanese yen. We're looking at about a 4-pip spread. I'm not even remotely interested in that. Gold's 103 pips. Australian dollar, New Zealand dollar, 2.6 pips. U.S. dollar, Japanese yen, 1.6 pips. I'm just not even remotely interested in that. And then also choppy price action, what I call sweeps. That's when a block order hits the market and moves it dramatically for no apparent reason in just a split second. No, thank you. Something about the trading handbook, what to do on holidays. Something about a 10-foot pole. I'm not interested. Now, there's some traders out there that are great holiday traders, and if that's you, go get them. There's only a couple of rules on this stream. Number one is if I don't know, I'm not going to BS you. I don't know how to trade holidays. I've had bad success meaning I've lost over the long haul on holidays. Right now, prep time to get ready for the week ahead, and it's time to just really get ready to dive into these markets that are going to be picking up relatively soon. It's going to happen after today's U.S. Futures Open, which is going to be right around 6 p.m. Eastern. You're going to be looking right from that open, that futures market open, 6 p.m. or so Eastern, right into that Tokyo Open. That's when you're going to get the flurry of participation. So you're going to be ready for that. Now, we're going to cover a lot of markets. I'm going to look at a lot of key levels today. Bitcoin we're going to start with, but dollar, yen, have to look there. Aussie, Kiwi, that's a big one as well. You also got to look at gold and silver. It's not a party without gold and silver. We also had a few trades that weren't bad on the 9 EMA today, believe it or not, but I don't recommend taking them in this market environment. So, BabG's, yep, you did miss the USA volume today, that's for sure. Let's see, yes, sir, game, and good to see you. Yes, sir, welcome. Lewis, hello, Shane. Hello, Lewis. How are you? Jason, what's up, Shane? What's up, Jay? I'm sure everything is doing well in your guys' neck of the woods. Tina Jing, good to see you. Hello, Shane. You're working on this bank holiday. Yeah, we don't. Money never sleeps. I would never take a Monday off. I'm still in front of the charts. We're still building things out here. It's just a great day to prep. It's just a great day to prep and get ready to trade. That's what I would say. That's for sure and certain. All right, guys, let's get right out to price action here via the Bitcoin market. Now, Bitcoin, this is a trade update. Put this out last week. I think that it's going to probably come into play. We're not seeing the bounce that we needed to see out of Bitcoin, even though we're long-term bullish. It just isn't. It doesn't seem to be happening. So let's get right out to price action here on the 12-month Bitcoin chart. You'll notice right there on the 50% level, 70,000. There was a lot of punters there. There was a lot of buyers and sellers right at 70,800. Just didn't really develop. The market washed out. It didn't act as downside support. Nice big sell-off right down to our next support level, which is right around 57.8. So we haven't tested this level yet. We've gone down to a low of 59,930. I'm still ready to go from about 58,000. That will be the big one. I mean, that's the biggest level right here. Things are changing in the Bitcoin market, and it's not pretty. And let's just get right into our discussion. You know, what could this really, why is the selling there for Bitcoin? There's no real reason for it. There isn't. I mean, think about what we're dealing with here. You've got the Trump administration, who is pro-crypto, the Trump family, the Trump kids, everybody's into these cryptos big time. How many meme coins have they launched? How many Bitcoins have they acquired? So there isn't any governmental reason to think that you're going to see some surprise regulation in the crypto sphere. This is a bullish environment for crypto. We know that rate cuts are coming later this year. We know it's going to start in June, and it's probably going to be very aggressive. I would be highly, highly surprised if that's not the way that this year unfolds. Now, if we know that dovish policy is on the way, and we know that the government's not going to regulate Bitcoin or crypto, what the hell could be bringing the sellers to the Bitcoin? I don't have an answer for you. I do not have an answer for you. All I have is rumors and scuttlebutt, and everything that I hear is they say, hey, those Epstein files, they think they've found out who made Bitcoin. And I go, who cares who made Bitcoin? What does that matter? And then the truth about crypto starts to creep to the forefront. It really, does it have real world applications? What is it? And believe it or not, 15 years into Bitcoin and 15 years into crypto, nobody really knows what it is. Are you really going to use Bitcoin as a mode of commerce? It's turned into more of a store of wealth. The ETFs are going to play a big role in what this thing's worth. Those are electronically traded funds. They acquire physical Bitcoin to back their fund's value. Well, what happens when these ETFs have to start unwinding their positions because of an outlier? Is this Epstein fallout going to be an outlier that crushes crypto? Now, I've seen this idea floated all over the internet. I'm not really a conspiracy guy. I think if something's worth something, it is. If it isn't, it isn't. But we really have to step back and say, what is happening to Bitcoin? What is happening to crypto? There's a panic there. There really is a panic there, and it looks to be correlated a little bit. Looks to be correlated with these Epstein files. So here you go. Epstein files fallout takes down elite figures in Europe, and U.S. reckoning is muted. It's coming. You're going to see people in the U.S. get clipped. It's going to happen. The contrast is striking. In Europe, some people whose names come up in the Epstein files are facing consequences, but in the U.S., not so much. Well, this was an interesting story. I actually posted this one. I posted, where is it? Well, I don't know. I posted this one inside of the trading room that was from Saturday, I believe I posted it, Friday or Saturday. And it was the top lawyer for Goldman and Sachs stepped down because her name came up in the Epstein files. Goldman and Sachs is a huge investment firm. The real question is when these files come out in full, what are we going to see with regards to any more figures in the financial world? Is that going to impact hedge funds, ETFs? Are they going to start liquidating assets to maybe cover losses or maybe put pressure on the government to not prosecute? It is all possible. It is all possible. As active traders, we have to say, okay, I don't know much about the Epstein stuff, and I don't need to know much. But what I need to know is it a potential market driver? 100%. If you see the fallout get as bad as many think that it's going to, you could definitely see major sell-offs pop up out of nowhere. And if that's the case, we have to be ready for the volatility. So if I'm looking at something like a Bitcoin, I'm going, okay, we can take that trade. We can scalp from 58, but we have to know where this market's going to fall apart. If it breaks beneath 58, you're going very, very low. I'm looking at 39. I'm looking at 40. Now, I would love that down there. I think that's probably where this market bases. But in a complete liquidation scenario, we've got great scalp trades to the downside. You probably wouldn't be looking to step up and buy this for a serious investment until you come right back down here to where we were not too long ago, which was about 15,000. Can we get there? Yeah, we can get there. Now, I'm giving you the bearish look. I'm giving you sort of the look at what happens to Bitcoin if the world falls apart in crypto. I don't know that that's going to happen. I really don't know that that's going to happen. I think there's a lot of buyers there that really love Bitcoin, and they're willing to buy this thing all the way down and then look to ride it out over the next several years. But what I'm worried about is the hedge funds, and I'm worried about the ETFs. And if something, an external factor like these files or investigations or indictments, if they all start bringing about real catastrophe, I can't speak at all anymore, catastrophe in the crypto sphere, then you're going to see a major correction in these assets. So those are the key levels for Bitcoin. That's what I would be watching. Something like Dogecoin's interesting. It really is interesting because it's not necessarily the gold standard of crypto, but it is very popular and people love to buy it. But really that 10-cent level is what I would be looking at. We've traded 10 cents pretty much every year that Dogecoin's been on the front burner there. Definitely be watching 10 cents. And until we break from that zone, don't expect much out of Dogecoin. Ethereum's one that's just got absolutely hammered. And I mean hammered. So if you're looking at Ethereum, this is an ugly scenario. Potentially, you've got last year's low down there at about 1385. We've got quite a ways to go to get there, but it's possible. It's really possible. And if you want to take sort of those all-time ranges for Ethereum, something like that, there's your double top. We were up there not too long ago. It was not that long ago. Think about what's happened. We were at $5,000 for an Ether. You're down to 1,900, and to be brutally honest with you, that range, that's 62% right there at about 1,900. That's as important as levels get. If that level goes and we trade beneath last year's low, 78% is not going to help you. You're going right down to 1,000. That's where the bidders will step in probably, and whether that level holds or not, I don't know. I know I'm doom and gloom here for crypto, and a lot of folks say that, hey, on the pullbacks is the time to buy, and you're not wrong. For me, I'm not comfortable at all in this environment buying crypto. It scared me off of my Shiba trading. I wanted to get into Shiba. I've been sort of outspoken about that. There's no question about it from this zone, Shiba's a buy. If things are okay in the crypto sphere, Shiba's a buy, but you can't really buy it right now because if things go bad for Bitcoin and Ether, what do you think is going to happen to Shiba? It's going to get real bad. these altcoins are going to get smacked in a big, big way. You need a healthy Bitcoin, healthy Ethereum. Some of those altcoins making a move. You need XRP to be there. You need like Solana to be there. And for Shiba even to believe it's worth anything at all, which it's debatable if it is or not. To me, this was just a pure speculation play. But you can see the volatility in this zone. That's a 30-minute chart. I mean, you can see exactly what this is. There's your crash. Your crash low right down there to about, 555, and then the big rally right away. I mean, that's essentially what we were looking to do. That's a huge gain right away. The question now becomes, what's happening? What's happening? Are we getting ready to make another leg down or not? So I'm scared out of the Shiba market for right now. I'm not interested in going in hard. I could have went in hard there and bought the 55s, my green line, and made a lot of money on it. Didn't do it. Don't like the environment. It feels like we're going to make another leg lower, and I'm going to go ahead and wait. I'm going to go ahead and wait before we get involved. All right, now one of the great things about holidays in the modern electronic marketplace is that we've got plenty of things to trade, believe it or not. We just looked at crypto. Crypto markets are open. The Forex markets are open as well. They just aren't as attractive. I mean, honestly, nothing's really attractive today, but we've got some Forex pairs that we're going to go ahead and look at. And, of course, we'll look at metals. Anything you guys want to ask or look at today, definitely be sure to do so. As far as our weekly calendar goes for the coming few days on the market, I have something here. Well, there you go. Yeah, we just got an issue here with our tech. Tech seems to blow up every day now. Okay, here we go. There was our trade update. Here's going to have our week 8 with our week 8 schedule. Monday's President's Day. Tuesday's the RBNZ interest rate decision. Wednesday is FOMC minutes. We're going to be back and in force for that. And then also you've got Thursday, Philly Fed initial jobless claims, EIA crude oil. Crude oil is in an interesting position. You should not be trading crude oil today. On a U.S. oil, don't do it. The reason why is the WTI contracts are split. So we're in the midst of rollover for the futures. And also you've got a holiday session. You don't want to be involved in oil today. That's a bad mistake. Wait until Wednesday, Thursday. It's going to be a much better time to be trading crude oil. And then Friday really could be your biggest day of the week with the core PCE index, U.S. GDP, and new home sales. So we've got an active week ahead of us. I think we're going to be in pretty good shape. Just remember today is that holiday trading, and you want to be extremely careful on a holiday. You can lose a lot of money fast with no real reason to do it. Okay, I've got a bunch of Forex pairs lined up. We're going to get on over to our 9 EMA strategy as well. Remember, if you want to trade the 9 EMA, go ahead and check it out. Just go ahead and register for your free strategy pack. You just enter your email, unlock the strategy pack. It'll go up to your downloads. Take your downloads or open your downloads file. You'll have another zip file in there. Open that up, and you'll see our PDF and also our custom EA. And also you can check the video out right there. Shows you how to install it, and you're going to have an opportunity to trade that strategy right from the jump. We've got a lot of great feedback on the 9 EMA over the years. We put that one out on how to trade quite some time ago. Switch Markets was sort of interested in using it as an educational tool. So I said, well, I tell you what, that 9 EMA is a pretty good place to begin. And it's an interesting strategy. You know, if you're looking for one, you definitely could just pull up the EA and add it to your MT5. Follow the videos. I show you exactly how to do it. And you've got a situation where you've got your alerts show up, and you've got a chance to really make some trades with a little bit of probability, maybe a little bit of swagger on your side. As far as what would I recommend doing with something like this today? Can't be trading this on a 1-minute chart today. There's not enough participation there. You can see right here, here's your sell signal. Sort of got stopped out. Very, very tight, though, because there's no action in there. You can step back to a larger time frame if you wanted. I think that if I was looking at something like this, probably would be looking at, say, a 4-hour chart. And this is just a good look at Bitcoin here. But notice on the 4-hour chart for Bitcoin, what has really happened over the last several days? Absolutely nothing. RSI, can't get above it, can't get below it. And you're in a situation where you're just walking in circles, man. There just isn't much there. So this is when you don't really want to trade. Right there, you'll notice, are we in overbought territory? No, not quite. 69.76. You don't take those trades unless the conditions are met. So remember, 9 EMA strategy, you put that EA in there. It comes up with a nice alert for you, and it also gives you a sort of a triangle, a purple triangle to sell, a gold one to buy. And we've traded this live with a little bit of success. We've taken some wins and losses, but we had a pretty good winner last week during that CPI release on Bitcoin. So it's an interesting strategy. Feel free to check out that strategy pack if you're interested and need a place to begin in the markets. All right, let's see. I got way behind on the comments again. My fault. Excuse me. Let me see. Babjeez, how are the Epstein files more volatile to the financial industry than Madoff? It seems so to me. They are. And the reason why is because Bernie Madoff was the fall guy. If you guys don't know who Bernie Madoff was, is he was a Ponzi scheme guy that was running $1 billion hedge fund on Wall Street, and it basically catered to the who's who of the entertainment industry and also the investment community. And the idea was, give me your money. It's an exclusive club, and I'll get you huge returns. Well, what they were doing is they were running a Ponzi scheme. You would give me $5, and then I would give you $7, and I would take this $7 from those investors. And as long as I had new investors coming in, the money was delicious. And eventually they popped Madoff for running basically just a Ponzi scheme. There was no investments, and the bad paper they had, they were just lying about. So Madoff was sort of an isolated incident because it's a good what you're saying, Bab, is absolutely correct. Madoff was a big deal, but the reason why it wasn't that big of a deal is because, number one, we're talking about, what was he, $4 to $7 billion, which at the time was big money, but it was in one hedge fund, and their investments were sort of in limited assets. The problem with the Epstein files is you're pretty much, you've got some of the heaviest hitters in the world, and they've got their fingers into a lot of different pies, a lot of different markets, and that's why I highlighted crypto today, because the scuttlebutt, there was a lot in those Epstein files that have been released so far that we're talking about cryptocurrencies, and a lot of us have never really believed in crypto being an asset. That being said, there is, if it comes out that maybe in those Epstein files that Bitcoin and these things were just a giant Ponzi scheme in themselves, they will crash. No question about it. So that's why I mentioned it today. But I think that the Epstein files are incredibly important to the world of finance, because there's a lot of names that are in those files, and they all come back to finance. JP Morgan was in there. And I'm not saying that these things are true or false or whatever. I'm just saying that sometimes there's something called guilty by association. And if the wrong person's name is mentioned in the wrong light and the wrong asset, you could see major moves hit our financial markets. It feels to me like that really is what everybody's worried about. And, panic's very real. People panic. And we saw a bona fide panic not too long ago. We covered it live in silver when it was down $30 or 30%, excuse me. And we were sitting there going, this is a bona fide panic. Panics are scary because your technicals won't work in a panic. And panics come out of nowhere, and they happen fast. And it feels like things are escalating. Things are escalating in this scandal. So anytime that's the case, I've always got my ear to the railroad tracks. I'm always watching a bunch of different news sources, and anything out there that can physically hurt me or financially hurt me and physically hurt me, I'm aware of. And I see this as being just a dark horse that could wipe trillions off the board in the blink of an eye. And it's something that nobody really knows much about. It's all rumor. It's all conjecture. That's how bubbles end. Is crypto a bubble? I was pretty bullish coming into this year, and I'm changing my mind quickly. Still, though, I think we can make a little bit of money on the way down. Might be able to. So let's see here. Yes, sir. Holiday and the U.S. dollar Japanese yen wanted to take off before the time I trade. I guess it decided to take off without me. All good. Still got the rest of the week to grab some winners. Yeah, I anticipate doing my work Tuesday, Wednesday, Thursday. I think we're going to be just fine there, but today is really sort of a no-fly zone. All right, let's get out to the dollar yen. Thanks for bringing that up. Yes, sir. Extremely popular currency pair that we're looking at here. Really, everybody's trading the yen right now just because there's good volatility. I've got my yearly chart up because I want to put this into perspective. I mean, Fibonacci's, I have a lot of faith in them. And you see right here, this pullback right into that area, 38%, right down around 138.90. That's absolutely unbelievable. That was our pullback last year. Went down, hit it, rallied up perfectly, and that was about 1,500 pips ago. So will that come into play again this year? I highly doubt it. I think that was your pullback, but there is a big case to be made for maybe the top being in for this pair. We know that we're going to get some rate cuts in the United States. The BOJ appears to be going hawkish, which is fascinating to me. I've never known anything but a dovish bank in Japan, and now we're sort of hawkish. We've seen a change in leadership in Japan, so there's a lot of things going on with the dollar yen that maybe don't look so great to the top side. So I'm interested in this pair. We were pretty much every time we'd show up to the office, at least in 2022 and 2021 and 2022, you just bet against the yen and you patted yourself on the back and you kept on rolling. And it was that easy. Just bet against the yen. It's not that easy now. Things have changed. You can see this area right up in here is fascinating to me. Last year's high, 158.88. This year's high, 159.45. We tested the waters by just 60 pips and then had put a full reverse on. So I'm looking at this market thinking, okay, what's important here? Key levels are everything when it comes to trading. At least in my book, they are 150. That's a big round one. Probably going to trade that level. Do we have anything there that can help us maybe develop a bid? Well, not really. What do you have right there? Yeah, nice big rally. Let's step back to a monthly time frame and see what that says. Okay. So here's our monthly time frame. Let's go ahead and mark 150. Absolutely key that we know exactly where that is on the charts, especially if you're going to be trading the yen for the near future. And also I like to highlight that in white. There we go. So that's a big level. No question about it, 150 even. Am I a buyer or a seller from there? I'm a buyer. I would play the scalp right above 150 to the top side and feel pretty good about doing it. So to start just throwing levels out there, it's relatively straightforward. Nice spike low there, and there's your top. There's your January top, and you got an area right between 150.83 and maybe 150 that's pretty robust downside support. Now, interesting because you've also got a moving average right there, which is right around 150.176, and you've also got a Bollinger midpoint right around 150.40. So this zone right in here, it's pretty good. It's a pretty good support zone. Would not shock me, and I know it's early, it's February, would not shock me if that's the bottom of this year or if we trade down and just sort of go sideways for months and months. Would not shock me at all, and we're ready for that. So that's how my technical outlook for the dollar yen would be right now. I'm not a real big fan of 50%. I'm not interested. 150.83, pretty good zone. 150, I'm definitely interested in that. So if we do see a pull or a nice big sell-off this week, FOMC minutes could potentially shake things up. You've also got the PCE and the GDP numbers on Friday here in the United States. That may shake things up as well. So we've got an opportunity potentially to trade. I just don't think it's right now in the dollar yen, but we'll be watching this pair all week long. Aussie Kiwi, a lot of folks trade the Aussie Kiwi. This one's a little more clear-cut. Time frame here, not a yearly, not a monthly or a weekly. How about a daily? Let's get as current as we possibly can. Spike low there. Spike high here. A couple of different ways to trade this action. I would stick to the easiest one, the simplest one. 116.94, absolutely fantastic downside support. That could be where the battle is fought this week. Right now we're trading about 117.26 here in the Aussie Kiwi. 116.94, somewhere down in there, probably pretty good. If I was going to be trading this, especially going into tonight's U.S. overnight session and the Asia Pacific session, you're probably going to want to be looking at that RB and Z interest rate decision. We're not expecting much, but you could definitely get a surprise that's going to shake this regional pair. Aussie Kiwi is definitely a regional pair. You're always looking at the Australian dollar, which is pegged to your gold, your iron ore, maybe your copper markets. And then you've also got that RBNZ, which is always going to be looking, that Kiwi is always going to be looking at the RBNZ interest rate decision. And also things like, I believe, powdered milk at one point was a huge export from New Zealand. So you definitely could be looking at that. And I'm not sure if pork bellies are still big down there or not. I probably should fly down and do a little research for you, but maybe later in the year. In any case, this zone right in here for that RBNZ interest rate announcement for this Kiwi, this Aussie Kiwi, definitely a key zone, 116.82. That's going to be your daily 13-day EMA, and then also 38% right at 116.94. You're going to have an opportunity potentially there for a pretty good bid. But you're going to want to see that. You're going to want to see price trade. I'd love to see it trade right up in here ahead of that RBNZ meeting, and then you get the big sell-off, and you can sort of sink your teeth into maybe catching the bottom of that move. Now, remember, central banks can do anything to currencies, so you've got to be very careful trading that. I probably would be waiting, 5 minutes before the announcement, 5 minutes after the announcement before I rushed in and got involved. You definitely want to be careful trading any sort of central bank announcements. They could kill you and kill you quick. So be careful with them. Okay, gold. It's not a party without gold. Here's a good look at our 4-hour chart with our 920 EMA crossover. This is an interesting chart to me. The reason why it's interesting is because it really does show you exactly the state of gold right now on a holiday session. Boom, right in there. 15th, 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 15th. What is the 15th? Well, 15th and 16th. It's today. Liquidity is gone. There's no liquidity in this market. It's flat. This is a textbook example of when not to trade crossovers. You don't want to do that. You don't want to trade crossovers on a holiday session. I actually made a video over on the How to Trade YouTube channel a while back, 3 times to not trade crossovers. This would be one of them, a holiday session. You can't do it. The market's flat. What you want to do is you want to wait for this business. You want to wait for business to pick up, for people to get back in the office, for traders to actually get off of the long holiday, and that's going to start happening towards this evening here in the United States. So be looking at that futures open. All right, the futures open for Tuesday, which is going to be, I believe, right around 4:30 my time, 4:15 my time, which is about 6:15 Eastern time. That's when you're going to want to be watching that this evening. You're going to see a rush of volume into the market as the traders get ready for their Tuesday session. Now, I don't know if it's bullish or bearish. I have no idea, but I do know that it's coming. It's coming. It's coming. No question about it. In any case, that's a good look at gold. I'm going to go ahead and back off, and I'm going to show you some Fibonacci retracements and things on this gold market just because it's, sort of my bread and butter. Gives a decent idea of what we're doing. 5,000's huge. 5K. Know where it is at all times. You have to. You have to know where it is at all times. It's a hugely important level. Today, you can see that you came right off of yesterday's overnight, which would have been right shortly after your London, or not your London Open, but shortly after your Japanese Open, your Tokyo Open, right into the London Open, and then you saw the big pullback, and then really limited liquidity here in the United States session. So we could open anywhere. This 5,000 level, though, be aware of where it is. That's textbook. We sold off, and then we rallied, and then we came down. The reason why I say that this area is so crucial, this plunge right here on the 12th of February, which was last Thursday, absolutely huge. A lot of that was because of 5,000. Apparently, there was a ton of retail stop losses beneath 5,000 that got washed. What happens now? I don't know. We gotta let this thing set up. But we do know one thing: 5,000 is very important. Step back to our weekly chart. Once again, let's see. Did we trade 5,000 there? Not quite. So 1, 2, 3, 4 weeks. We've already traded 5K. We don't seem to want to leave this level. This is really disjointed area. This type of chart shows the uncertainty in the gold market. Are we still as bullish as we were? No, not with that market structure. It feels like gold's finding a home at 5,000. It really does. This is what we would call an area of fair value. That means that buyers and sellers are both sort of happy here. Nobody really wants to commit and move this thing one way or the other. They don't want to move the needle. So when I'm looking at something like this, I'm going, okay, what should I do? Well, there's a lot of different ways to trade it. You could look at 5,000 as support. You could look at 5,000 as resistance, or you could just stay out of it. For me personally, I'm sort of on the sidelines with gold right now. Take a look at this range. I mean, this 3-day range, boom, boom, boom. We've traded inside of that for what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 2 weeks. So we've traded inside of this 3-day range for 2 weeks, over 2 weeks. So if we're going to range trade and understand exactly where this market is likely to pick up, business is supposed to pick up, it's going to be near one of these extremes. There's your 3-day range, right? We haven't been able to take that out, that big plunge that we saw when the silver market was crashing. 4,400 was the low. The top, your all-time high, and gold's up there right around 55.98. We're just nowhere. I mean, we literally are in the middle of that range. How do you want to trade it? I would stay out of this. Until it opens up a little bit. We can definitely build the case to be bidding down in here. I think that's a no-brainer. If we saw retracement down in there to take the bid, that's a no-brainer. But maybe selling up there, that's also a no-brainer. So we have plenty of ideas. I just don't know that right now is the best time to be doing this. If I was doing anything on gold, it would be all intraday stuff. You don't really have those long-term levels I usually have. You don't have them. The weekly retracements and all that stuff, it's all been had. It's all secondary information at best. So if you're going to trade gold, be aware of your news cycle. Be aware of your key events. Have probably a breaking news up in the picture as well, because a lot of things are happening right now, and it's all seeming to drive metals crazy. Be careful with gold, though. It really is disjointed right now. And what I mean is these ranges, these daily ranges, even though you're not moving that far away from 5,000, the daily ranges are really big. Take a look at my 13-day ADR down here, average daily range, extremely elevated. Look at what it was. This is extremely elevated stuff. That makes it really difficult to manage your risk on an intraday time frames. However, you probably can scalp and get away with it. Just be very, very aggressive with your risk management. Don't let these trades get in your pocket. You can break and run 8 or 9% in a day now, and it's just not that big of a deal. Be careful. Silver. Silver's interesting. We've broke down silver probably more than any other market over the past month. And the reason why is, it just is, it's sort of in a situation where everything that happens in the silver market is huge. Every move is huge. You don't see small moves. Today, the market dried up, holiday. Shouldn't surprise anybody, but you're still off about 1%. So even on the slowest holiday trade, you're still down 1%, which is crazy. So when we look at something like this type of chart, you can see we're trading right at a key level, which is 75. 75 really does appear to be the catalyst for two-way action in this market. I would be very aware of where 75 is if I'm trading silver. So there's your sort of your monthly time frame. Spike low there, all-time high up at 121, and now we're sort of settling in. We traded beneath January's low, rejected this zone. 62% was beautiful. $65, somewhere right in there. Epic bounce back up to 76. It feels like we're rotating around 75. Once again, it's going to be very difficult to make trades in this environment. When the market, it goes from being extremely volatile, and those ranges are huge, to very, very small and tight around a key number, you're going to run into trouble. More likely, more times than not, you're going to run into chop. And chop is just really difficult to trade. Really difficult to trade. So something to think about there. Oh, looks like we're dropping a few frames, so that's fantastic. Looks like our Restream IO servers are looking great. Okay, let's see. Great Britain pound, Japanese yen. Let's go ahead and see if we can get the job done here and find a level. Really love this stuff. This type of market structure is my favorite. It's my favorite to trade because you've got spike low, you've got a spike high, and you can see that we really are trending outside of that upper Bollinger Band. So for me, this is easy. Spike low there, spike high, and you've got your key level right there at 208. That's downside support. That's exactly what you want to be looking at for the rest of the week. 208.50, 208 even, right in that zone. Very, very nice. That's very nice. Let's take this down to a daily chart and see what exactly has happened at this level. Yeah, and there it is. Okay, so this is where the rubber hits the road. Are we only bidders here, or can we sell? You can do either. You can do either. The big thing is just how are you going to build your trades to make it worth your while? Right here, you've got the spike high and the spike low. You can definitely bring in the Fibonacci's and do something like this. Fibonacci retracements. Do you have a sell right there? Sure. 210.19, 210.25, somewhere in that area. You could definitely be looking at a sell. It's just a different play than maybe bidding this support zone. You can see this sort of rounded bottom. We haven't really drawn one of these, but it's like a little fish hook that's developing to the downside. Take a look at that. So if you're in a situation where you don't know what to do what everybody else did, right? No, I'm just kidding. You never do what everybody else did. You always stick to your guns, but, man, you know that there is a tremendous number of longs that are dug in from right around this zone, and the stop-out point is going to be right back there on the 12th of February's low. That's going to be last Thursday's low. You know there's a lot of stop-outs beneath that level, no question about it. So if you're thinking about potentially where this market may be dialed in at, could it be a lot of longs? 207.50-ish is probably going to be an area that if it gets hits, you're going to see that bearish sentiment probably take over the market. Fairly bullish right now, though. Long-term technicals still point to the bullish trend being intact. That's a big-time level. Monthly 38% retracement. Absolutely, 208.34-ish, 208 even, probably a pretty good support zone. You can see that that's where the demand has come in, and it's been relatively strong. So if you wanted to sell, sort of betting that maybe today or tomorrow gets a little overextended, up there from 210.19-ish, it's not the worst trade in the world. It's just not a position. So there's a lot of positions that are dug in, and they're really shooting the moon to the long side. But right here, this is going to be more of an intraday scalp. That's what I would be thinking for that Great Britain pound, Japanese yen. All right, everybody, I'm going to go ahead and sign off for today. It's a holiday session. Very, very difficult to trade these. I know a lot of you are probably struggling. I haven't seen that much on the chat going on in YouTube, and it looks like we're dropping frames, so there's probably a technical issue, which doesn't surprise me. It seems to be like that's what we're fighting these days. More than price action, we're fighting technical issues with pretty much all facets of this operation. So I'm going to do the best I can to get that fixed for you, but honestly, some of this stuff's just out of our hands, and that's about all we can say. All right, everybody. As we roll into this week's trade, discipline is going to be the most important thing. And Some of you probably came in today and you were aggressive and you took some losses. Learn from them. Don't leave those losses in vain. What you want to do here is you want to make sure that you're ready to go for tomorrow. And that's why I always say on Mondays, it really is a great day to prep. And even today, even more so, the President's Day trade is one of those that you don't really want any part of it. Even if you're trying to trade rotation and flat markets, it's not really worth it because the market's so chaotic that it'll just jump up and down on you and you'll really run into trouble. What you want is some order to the action, and the more traders that we have in there, the better off we're going to be because the market's going to be deeper, it's going to be more efficient, and our liquidity is going to be at a much higher level. So that's what we're looking at. That's why I'm not a big fan of holiday trading. If you did holiday trade today and you lost a little bit, it's a learning. It's a learning curve. It's a learning process. The next day that we have a Monday off, maybe just take the day off and do some prep getting ready. That's essentially what I'm doing with my trading. I'm looking to get involved tomorrow, Wednesday, and Thursday. And there's a few markets that we're looking at. Tomorrow's going to be tough on WTI crude oil. I did want to cover this before I sign off here. This is going to be tough. CME Fed Watch, right? We know that we're looking for interest rates to stay exactly where they're at in that March meeting, which is coming up relatively soon. But as far as futures contracts and the impact that they have on your commodities pricing, you just go right here to the CME, you go to featured products, and you're going to drop down right there to WTI crude oil futures, and essentially you go to the full-size contract here. You pull this up, and you go to quotes. And this will tell us exactly where our volumes are at. See where our volumes are for today? March, you got 62,000 on March. You got 55,000 on April. That's what we call volume dilution and a volume split. That is brutal to even attempt to trade that on a holiday as well. It's very, very low for each contract. But tomorrow you're going to see the rollover to the April contract. That 50-50 split is probably still going to be there. But a lot of times what happens is these markets get diluted. It's what I call volume dilution. So tomorrow probably not going to be a big day for me on the WTI crude oil markets. I'm not going to be real excited to trade them. We've been trading them very well, or I've been trading them very well on an intraday basis for the past, I don't know, since probably halfway through January. Things have gotten relatively stable. Be ready for a big move just because of the institutions switching from one contract to the next. And also there's a lot of spread traders that are going to try to bring that spread in, the difference between the price of March and April. And right now it's relatively tight, 63.79 to 63.62. This is delayed data, but that spread is definitely a lot tighter than it was to open business yesterday. No doubt about it. Okay, Steve MC, okay, bye. All right, see you later, Steve. All right, yes, sir, gaming. No holiday trading for me. I need that volume in the market. There's no reason to force it, guys. You can make more money trading in 10 minutes if you're in the right time than you can sitting here for 3 days. Believe me, at the end of the day, it doesn't do you any good to sit in front of dead markets. You got to be focused on when you need to be trading. That's tomorrow, Wednesday, and Thursday. Friday looks like it's going to shape up to be pretty good as well, so I'm excited for that too. All right, everybody, I'm going to go ahead and sign off. Good to see you, Ralph Atuku. Have a fantastic trading day. Get prepped and ready because business is going to pick up here in about the next 12 hours. Be ready for that volume to re-enter the market on the CME Open for Tuesday, which is going to be right around 6:15 Eastern, somewhere right in that zone. Okay, everybody, have a great day. Fantastic trading session. As always, trade the action well, and we'll talk soon. See ya.